Assalamualaikum, salam sejahtera and good morning ladies and gentlemen. Welcome to our session on regulation and supervision of Islamic financial institution. So, Islamic finance has been remarkable growth, extending its reach beyond Muslim majority countries to a global financial hubs like London, New York and Tokyo. This expansion reflects a growing demand for ethical and Sharia compliant financial products. So guys, what sets Islamic finance apart from conventional finance? At this core, Sharia law principles drive from Quran, Hadith and scholarly interpretation. The key principles include the prohibition of riba, which is interest. Ensuring transactions are based on profit and loss, sharing, trades and leasing rather than earning interest. So gharar or excessive uncertainty is avoided to ensure transparency and fairness in financial dealings. In addition, investment in haram activities such as those related to alcohol and gambling are strictly prohibited, aligning financial practices with ethical and moral value. Guys, today we will explore how these principles are maintained through the regulation and supervision, ensuring the compliance with Sharia law, and also we will discuss the framework in place and the challenges, also the opportunities within this dynamic field. Let's dive into this world of Islamic finance and understand the critical role of regulation and supervision in growth and integrity. So let's go guys, check it out.
Assalamualaikum, my name is Nur Paramani binti Wahab. My entry number is 8228080. Today I will provide a brief overview of two key organizations in the Islamic financial industry, which is the Accounting and Auditing Organization for Islamic Financial Institution (AAOIFI) and the Islamic Financial Service Board (IFSB). The AAOIFI, established in 1991 and headquartered in Bahrain, is a leading international non-profit organization. Its primary mission is to develop and promote Sharia standards for Islamic financial institutions. AAOIFI contribution includes standard setting. It has issued over 100 standards covering accounting, auditing, governance, ethics and Sharia compliance. Next is Sharia compliance. Ensure financial product and operation align with Islamic law. Prohibiting interest, riba, excessive uncertainty, gharar and gambling market. Next, training and certification, which is offer certification program and training to enhance industry expertise. Next is global influence, widely adopted standard influence regulatory framework and practice worldwide. Next, IFSB. The IFSB, established in 2002 and based in Kuala Lumpur, Malaysia. It is focused on promoting and enhancing the stability and the strength of the Islamic financial service industry. Key contribution of IFSB includes standard setting, which is issue standard and guideline for risk management, corporate governance and capital adequacy. Next is regulatory framework, which is assist member country in implementing standard to ensure the safe and the strength operation of Islamic financial institutions. Next, research and publication. Conduct research and publish report on various Islamic finance issues. Next is training capacity building, offering training program to enhance regulatory and supervisory capabilities. Next is global collaboration. Collaborates with international organizations and industry stakeholders. The difference between AAOIFI and IFSB is AAOIFI focus on accounting, auditing and Sharia compliance standard. IFSB emphasize regulatory and prudential standard for overall industry stability.
Hi, my name is Suraida binti Rosdin and my message number is A22A0672. Now I will continue about regulatory framework. Malaysia regulatory framework including the Center of Malaysia Communication and Multimedia and Security Commissions establish regulatory bodies and oversee payment system infrastructure, ensuring safety, reliability and efficiency. Bank Negara Malaysia (BNM) governs the regulatory framework for Islamic financial institutions in Malaysia, providing Sharia compliance, guideline and standard. These two frameworks ensure Islamic financial institutions operate in accordance with Sharia law and meets the same regulatory requirements as conventional institutions. The regulatory framework including enhanced corporate governance, revised operation and risk management requirements, enhanced IT requirements including cyber security management and technology audit, outsourcing engagement, right labels link, prohibition of promotions or cross-selling of financial product or service, and enhanced IT requirement for mobile technology and QR. The regulatories aims to maintain the stability and integrity of Malaysia financial system while also fostering the growth of Islamic finance.
Hi, my name is Izamila Fifi bin Ismail. My matrix number A22A0811, and I will talk about roles of Sharia Board. Here are 5 important roles of the Sharia Board. First, Sharia compliance. The foremost duty of the Sharia Board is to ensure that all activities, contracts, investment, and operations of the financial institution adhere to Sharia principles. This involves scrutinizing every aspect of the institution's operations to ensure they do not involve elements prohibited in Islam such as riba, ghara, and haram activities. Second, the product review. The Sharia Board reviews and approves the structure, terms, and features of financial products and services to ensure they are Sharia compliant. This encompasses Islamic banking product, takaful policies, sukuk, and investment funds. Next, fatwa insurance. The Sharia Board issues fatwas or legal opinion on specific financial matters, providing guidance and rulings on the permissibility or prohibitions of transaction and contracts of Sharia perspective. Oversight and monitoring. The Sharia Board monitors the implementation of Sharia guidance within the institution, conducting regular audits and reviews to ensure ongoing compliance. This involves checking that the day-to-day operations align with the established Sharia principles. Last one, educational role. The Sharia Board educates stakeholders including management employees and customers about Sharia principles, ethical standards, and the importance of Sharia compliance in Islamic finance. The Sharia Board might organize training sessions for the bank staff to help them understand the importance of Sharia compliance and how to implement it in their daily operations. In conclusion, the Sharia Boards play a crucial role in ensuring that Islamic financial institutions operate within the boundaries of Sharia law by overseeing compliance, reviewing products, issuing fatwa, monitoring implementation, and educating stakeholders. The Sharia Board helps maintain the integrity and ethical standards of Islamic finance. This holistic approach ensures that the financial institution not only adheres to Islamic principles but also promotes transparency, fairness, and social justice in its operations. Thank you from me.
Auditing process overview. Planning the audit. Step 1 is define scope and objective. Decide what areas will be audited and what the goal are. Number 2, understand the business. Learn about the company, operation, industry, and environment. Number 3, assess risk. Identify areas where there might be significant error. Number 4, create an audit plan. Outline the audit step, schedule, and research. Next step is conducting substantive testing. Analytical procedures. Looks for unusual patterns or trend in the financial data. Test of detail. Examine specific transactions and account balance in detail. External confirmation, confirm balance and transaction with the third parties. Example given banks or reviewing audit evidence. Evaluate evidence. Check the relevance and reliability of the audit evidence. Collaborate findings. Cross-check information from different sources. Resolve inconsistencies. Address any discrepancies or issues found. Report findings. Prepare audit report. Summarize the audit process, finding and recommendations. Conduct exit meeting. Discuss the findings and recommendation with management. Issue final report. Deliver the completed audit report to management and stakeholder. So the last step is follow up. Ensure that the identified issue are addressed or resolved. Review management response. Check how management plans to address the findings. Monitor corrections actions. Track the implementations of corrective measure. Number 3 is conduct follow-up audits. Verify that the correct action have been effectively implemented. So the last step is summarize for presentation. Present the audit result with explanation, brief and to the point.
Next, the challenges in regulation and supervision. In Islamic financial institution in Malaysia face several significant challenges in regulation and supervision. Firstly, the lack of standardization in Sharia interpretation leads to diverse financial practice even within the country. Different Islamic banks may have slightly varied criteria for what qualifies as Sharia compliance, resulting in regulatory inconsistencies. Secondly, the complexity of Sharia compliance poses substantial difficulties. Ensuring all financial products and services adhere to Sharia principles require complex process and regular consultations with Sharia advisory councils, adding to operational burdens. Lastly, limited regulatory experience present a major challenge. While Malaysia is a global leader in Islamic finance, the continuous innovation in financial product necessitate that regulators constantly update their knowledge and expertise. Evaluating new and complex Islamic financial instruments requires specialized knowledge, which demands ongoing training for effective oversight. Solution to regulation and supervision challenge. To address these challenges, several solutions can be implemented with the Malaysia context. Firstly, standardization of practice is crucial. The Central Bank of Malaysia, which is Bank Negara Malaysia, can further promote the adoption of international standards set by organizations like AAOIFI and IFSB, harmonizing these standards with local regulation to ensure consistency across the country. Secondly, strengthening Sharia governance is essential. This involves establishing robust Sharia governance framework with clear rules, responsibilities, and regular audits, ensuring that all Islamic financial institutions have independent Sharia boards and follow the guidelines set by Bank Negara Malaysia's Sharia governance framework will lead to consistency compliance with Sharia principles, reducing operational risks. Lastly, capacity building for regulators is vital. Continuous investment in specialized training programs in collaboration with local and international academic institutions will help regulators keep up with the latest development in Islamic finance. This enhanced regulatory oversight and expertise will ensure that regulators can effectively supervise the evolving Islamic finance sector. So, by focusing on these specific challenges and solutions within the Malaysia context, we can better understand the unique regulatory environment and practices that contribute the success and continued growth of Islamic finance in Malaysia.
My name is Nur Sadatushda bin Zakaria and my number matric is A22A0700, and I'm going to elaborate more about the conclusion, effective regulation and supervision in our group. So in conclusion, effective regulation and supervision is the key to developing a stable, ethical and innovative Islamic financial industry that is able to meet the needs of the community and contribute to the country's economic and social well-being. This is because the regulation and supervision of Islamic financial institutions is important for financial stability to preventing financial crisis by controlling the risk taken by institutions. In addition, the preventing of illegal action assists in detecting and preventing illegal activities such as money laundering. As I described above, there are challenges in controlling supervision such as the lack of standardization in the interpretation of Sharia, and the second one is the complexity of Sharia compliance, and the third one is limited regulation experience. However, there is a solution to this step, which is the first one is namely standardization of practice is crucial. Second, strengthening Sharia governance in essential, and the last one is capacity building for regulation is important. To all the explanation above, we consider strong and important framework to ensure stability, integrity, Sharia compliance in Islamic financial operation.